All right, it's October 10th, 2020, and I wanted to go over just a couple of stocks that I'm looking at myself. Um, I was asked, so I was asked before, like, how do I know, like, what time frames to get in at, and how to really use time frames effectively with a buying price. There's a couple of ways of doing so. The very first thing that I do is look at the total, like the totality of the chart. So I look at how wide it's been trading essentially. So this is SGMO, Sangamo Therapeutics. They had a deal with Gilead. I remember earlier in the year, and it caused this spike over here. Um, from like the twos to 11. So I remember that happening because I woke up one morning and was like, when the world happened with this company? Obviously, it came back down, but right now, um, it had a strong green candlestick on Friday. So that green candlestick, which 2 million shares were traded the day before that, 1 million. So it just kind of doubled. The day before that was a million. So it was trading a million and then just kind of doubled, but it increased on Friday. Um, so that's one thing. The is seeing what does it look like long term, right? So when I look at it long term, we see that it ran up and then came down, and then now essentially it's kind of trading sideways, right? So after it spiked up and then came down, because usually after a big spike, there's a follow up with a decline, which happened here. So there was a continuous decline, and then after that spike with the news with Gilead and everything like that, um, it kind of just traded in this range. So now it's trading sideways, right? It's been trading between 11, well, I should say really about like 8, 850, maybe 930, say around 930 to about 1170, maybe 12, right? So, and I'm using this line that I'm hovering over here as areas of resistance from the past. So these are areas of resistance from the past, right? I should probably do a video on just resistance and support, but I feel like there are so many greater videos that really go into the details about that. Um, and I want you to be able to just see what type of stocks that actually have movement and that you can be able to really double your money easily. Let's duplicate this and let me just put a support line here around that 950 area. Yeah, so right around there. So it's been trading in this little zone here, this little $2.50 zone, right? So because it's been doing that, and I don't want to, I hate cluttering up my graph with lines. That's why I didn't have my support, my resistance or support labeled on here. I kind of already knew what it was by looking at it. And you can tell, like the previous report, you see that there was a nudge a couple of days before any decisive action happened, and that decisive action was it going downward. So, so that's what we're seeing here. We see that now is going sideways, and typically when a stock follows a big decline with a sideways price action, that means that typically the percentage of it going higher uh, resides on this consolidation period. I'm not saying that this is what's going to happen, right? I never will, but I tend to use options, and options really does tell a lot. I'm starting to realize I haven't really made a video in quite a couple of probably like 2 months, really just trying to, um, I guess, fine tune my trading strategy. And what I'm seeing here is with some of these options, you have that um, the delta. The delta really gives you an understanding of the percentage that the stock will move to the next dollar, right? Um, so right now we have some calls, obviously at $10. It's at $10.83. We know that it's going to stay in $10, right? There's an 81% chance that it's going to stay in the $10 range, right? So that's something else. I'm starting to see if how options really influence the price chart. But let's say we don't know anything about options, but I'm just giving you that little nugget right there. Um, so we don't know anything about options, but we see that this trade now is trading above the 200 SMA and it's holding support, right? The 200 SMA, typically if it trades above that, you get infinite spikes like this over here. So right now, and then once it comes below it, you see that it really holds down and will continue to go lower, with spikes to the 200 SMA before being rejected back down. But here we see that it finally did cross over the 200 SMA, so we have all this upside, a potential upside to start gathering. And maybe the Gilead news might give it some help. But the further go on with this analysis, and we have an idea, I'm going to take these lines away now. Um, Move. So now we have an idea of where the direction of the stock is and where we might be buying. We see that on the day, like the past week or so, after it bounced off the 200 SMA, it started coming to these other lines that you see on the chart. These lines are averages, and these averages are consistent with a 20-day SMA and a 5-day EMA. So the 20-day is a simple moving average, and the 5 is the exponential moving average. And these are just point patterns that help layer or confirm my thought process on a stock going higher. So when a momentum has changed or shifted, there's a cross in the MACD. The MACD lets you know that the momentum is going in a new direction when you have this type of cross. And when this cross happens and you see that there's buying momentum underneath it, and then you also see that the RSI, the relative strength index, is showing more upside after it bounced off its lows, which was the 200 SMA, bounced off its lows. Now that it's coming towards overbought, it has an opportunity to go higher, right? Because now that it bounced off of the 200 SMA, which here on the RSI is the overbought area or oversold area of the chart. So it can no longer be sold anymore. It can only be bought. And since it bounced off of that area of support, it just has the opportunity to go higher. So I know I mentioned the moving averages here, and I went straight to the MACD. Well, I want to explain that. The reason why I went straight to the MACD, because the MACD on the day gives you an idea of if this is an opportunity to buy, right? So it's giving you that this is a great candidate to buy now, and should be either on your watch list, or if you were able to get in earlier on the day, you're in this position. I like that. If I was in it on the earlier part of the day, I would probably feel a little bit comfortable, mainly because this is engulfing, right? We have a bullish engulfing candidate here, where you have the green candlestick engulfing a red candlestick that's engulfing a green candlestick, then engulfed a previous red that found support from two green candlesticks. So now it's just looking to fight the support at close to $10.90, $11. So because it's finding that resistance there, I think I said support, I meant resistance. Since it's finding that resistance there, it would not be shocking to me if there was a pullback And the reason why I say it wouldn't be shocking to me if there was a pullback on Friday, and I'm not saying that the day ends on a red day. I'm saying that because of these moving averages, where the price is at 1017, there's going to be a tendency for that stock price to get pulled back. Now, why do you say that? Or why do I say that? I say that because when I look at the other time frames, now this is 1 hour. Each candlestick represents 1 hour over 180 days. So we see it. Same concept here, right? Don't get faded out by all the jagged edges, but just see where the price action is relative to the moving averages, right? So remember what I said. If the stock is trading below the 200 SMA, more than likely the price is going to go down. If it's trading above the 200 SMA, it's going to go up. But in between, it's going to try to test, it's going to try to come back to the 200 SMA, right? So we see that here. Even though it came down, it traded sideways and then came back up, right? Came down, traded sideways, came right back up. Now it's up, trading sideways, came back down. When it came down, it traded sideways for a little bit, then went back up, and it's kind of trading in a range here before it spiked. Kind of found resistance, came back down. Where did it come back down to each time? The 200 SMA. And now that it spiked again, and anytime a stock finds finds a high over a collection of days, or on the over a collection of days, over a collection of years, or even a collection of minutes, we know that after it finds that high, it's going to bounce off of that new high and pull back close to the 200 SMA, if not one of the other moving averages. Its average is going to continue trading at its high, unless there's some magnificent news to allow that. So, with that being said, all right, so we're here. It created a new high, came back down after it created that new high below the 200 SMA, then came back up, traded sideways to the 200 SMA, then bounced back down. All right, so now that it bounced down and it bottomed out, and we can even match that with the MACD and the RSI, right? It came down every time to being oversold and then bounced. And so it came down, oversold, bounce. Came down, oversold, bounce. And when it did that, it gave it opportunity for the 200 SMA to come with the 5, to come close to the 5 EMA and the 20 SMA. So now, when we zoom in for the past, this was Friday, this is Thursday, this is Wednesday. So now, for the past couple of days, we see that the stock price has now genuinely crossed over the 200 SMA on the hour chart. All right. So now, what did we say that the price point on the day chart was? We said it was 1017, 1016, something like that. 1017, right? So if you highlight it, you see it right here, 1017. So it's 1017, 1017. We go to the hour chart. We see that the 200 is at 1011. This is risk, right? Your downside. Always use the 200 SMA as your downside risk to identify where a stock could potentially go on the downside, because you know you want it to go up, but where, on which level are you risking for that upside, right? So now that we see that on the 5 EMA, we see that there's a price point at 1068, and on the 20 SMA is 1029. So we know by the hour that it has opportunity to come back to at least 1029, right? That is bare minimum. Like, bare minimum is saying that it will stay there and it will come down there, and mainly because it's when the stock price is trading below the moving average, the 5 EMA, or even if it was the 20 SMA. If the price is trading below it, the opportunity for the traded price to meet the 20 SMA becomes a greater chance, right? So, but that doesn't mean that it's going to continue to go down, right? So this is why using the moving averages, where it might sound confusing, is used. You should use it as a good indicator on identifying when to get in and when to get out. Um, this crossover here happened during the pre-market, probably at like 4 a.m. Oh, okay, 8 a.m. So this cross happened at 8 a.m. during the pre-market, and it gave an opportunity for someone who were to buy in to ride the wave upward. But you wouldn't have known that. So you're waiting for the price here to balance out, to close this gap. And we will know if the gap will close if we see the MACD and the RSI come back, if they pull back. If they pull back, then there's opportunity for this price point to come closer to this 1029, 1030, right? Then we'll compare it on the minute chart. On the minute chart, we'll do the same thing. Now, on the minute chart, we'll see that in the after hours, there's a price point that went below the 200 SMA. So we don't know, and it's oversold. So the most that we know is that because it's oversold, it could bounce off of that being oversold. Even though it's trading below the 200 SMA, it's oversold. So that oversold will only cause the shares to ricochet and come back up. Now, and once it ricochets from being oversold to not, how much can it stay above this price point of 1068? Particularly if I'm saying that, on the hour chart, that it still has potential to come down. All right, so 1068 on the minute chart probably does not seem too reasonable. It sounds like that there will be some pullback, um, and because of that, the price point should come close to 1030, 1029, or something of that nature before going higher. Right. So that is with SGMO. I see it going higher, but I also see it having a lot of resistance. And as you could tell from its previous chart, chart pattern, even though it will go higher, it will tend to go higher, but it will do it with days where the red candlesticks will show up. So you'll have a green day, then you'll have some red days, you'll have some green days, and some red days, but it will slowly climb up. This is a good one just to like, if you wanted just to put something in just a hold, this would be even a good hold. You could probably get in at like 10.30, $10.30, and then from there, this allow it to ride the wave. But you're using the moving averages as a means of getting in when they cross. So you see that it crosses on the MACD. That means that there's a change in the momentum, and then the cross at the 5 EMA over the 20 SMA, and both of them are both moving averages. Excuse me. Ooh, there's something in my throat. Both moving averages are above the 20 or the 200 SMA. I'll give you another example of this just so that we can follow. Excuse me. One I have been trading was Peloton, which has been doing almost the same. I don't know if this will give the best idea. Maybe, maybe not. I'm trading this on options. I traded it bad because I didn't know this. I wasn't following how there was a cross. Once there's a cross here, there's an opportunity for upside. When it crosses and goes down, there's an opportunity for downside. So when I bought here and I sold here, I was being greedy because I didn't understand the rule of a new high being created. So once a new high is created, the price could pull back, and it could typically pull back to the 5 EMA first, then to the 20 EMA second, and then if it's a huge sell-off, then to the 20 or to the 200 SMA. that would be crazy if there was a huge sell off to $50 on Peloton on Monday, but I don't see it because of this bullish engulfing candlestick, and it's an at-home play. Um, but yeah, I don't think this is the best chart to do. Yes, this one. This one I played a couple of times, and then on this past week, I bought options in it. But as you can tell, right, let's apply the same thing we just did with SGMO, which SGMO I am kind of looking to buy into that, just exactly where I said, like around that 1030 area. I'm not saying that that's something you should buy. I'm only saying that's something that I would want to do. So with lumber liquidators, right? It's been trading. It's been trading pretty well, and because it's been trading so well, it also came back down, right? So we can always go all the way back, all the way back, all the way back, but that much doesn't really interest me as much as over here does. So like, all right, so we see that it came down or went up and then it came down ferociously, right? This is all before Corona too. So it came down. It's all trading below the 200 SMA. Continues to trade below the SMA, and even goes lower, right? Below the SMA, and then it starts to pick up. Picks up around this March, April time because people are buying, home goods and stuff like that. They want to remodel their home. These are, makes sense. So, what happened? The stock not only crossed back here, well, actually, right around here, there was a cross, right? There was a cross in the MACD signaling a change in momentum. But even though it might do that back there, I typically don't trust it until it crosses the 200 SMA, just because I want to avoid the rejections. So the first time I was buying around here a couple of times, this is when I was really starting to understand that there might be some, I had layering, trying to use my time frame to layer, the 1 hour, the day, the 1 hour, and the 1 minute, trying to layer that with the MACD and the RSI, and with the moving averages, because it's like a confirmation bias, right? If one thing happens, then it sets off a chain of events for a stock to go in the direction that you kind of anticipate, that you're projecting. So essentially, what I ended up doing, I bought it a couple of times here and here, but this last time that I got in, I was waiting, absolutely waiting, and this is a perfect prime example. There's a cross here on the MACD. This MACD signals. It's signaling everything for it to change direction. It's trading over the 200 SMA. It's trading over the 200 SMA, right? Even though it's trading over the 200 SMA, there's also a cross at the moving averages, the 5 EMA and the 20 SMA. So because of the cross there, this is giving me a signal that there could be more upside. This right here was a very bullish candlestick pattern, which is engulfing. I like the engulfing. So typically on this day, which is where I bought in, it came down first. It came down and then went up. So that day was the 1st of October. So let's go to the 1st of October. Let's just see it real quick. Right around here, right. So it came down, like I told you, in the morning at 9. And then it started to come up. Right? But the next day, pulled back heavy. Where did it pull back to? To the 200 SMA. And came back up. Started to do it again, right? Even though it went up, there was always a time during the day that it will pull back. So it would be trading over the 5 EMA and then pull back to the 20 SMA, and then go back higher, right? Retest the resistance, pull back. Pull back. Not only did it pull back heavy below the 20 SMA, but it tried to get to the 200. But it continued to go up higher. And then I started to sell some right around here, sell some option contracts. I didn't hold it to all the way up here, which kind of makes me sad because I knew it was going to make this kind of run. But it's whatever. And the reason why I knew that is because I was using the time frames between the moving averages. Um, I hope this makes sense, right? Using the moving averages kind of gives you an idea of where it's to go. I didn't want to sell this just because I knew it was going to make this type of run because it tends to make those type of runs multiple green days, right? You might have one or two red days in between, but majority of the time it's just a green day. You just kind of just wait and hold until it gets too far overextended. Like right now, it's about to get overextended. It's over on the RSI, so kind of wait for a pullback. It's at a resistance level now, near this $28 area. It's going to pull back a little bit, and if it pulls back and it pulls back a little bit harder than anticipated, then wait for that for an opportunity to buy because now it's discounted. So, like I said, you use the moving averages. Uh, I would not have I would not even buy this right now. I would just wait for the pullback on this 25, 28 on the 5 EMA. So and the stock price is at 26.96. So at some point or another, it's going to come close to the $25 area before it bounces up higher. Maybe even comes close to this 22. I'm trying to light it up. Yeah, 22. Oh, it's lit by itself. Okay, 22.54 might come to this price, right? That's your risk level. So this is what I'm referring to with measuring your risk levels with the 5 EMA, the 20 SMA, and the 200 SMA, because you don't want to risk upside that you can't really determine for downside that you can really typically see. So, these are really good indicators that show you how, how to look for a good time frame to buy in on. So, like I said, you look at the time frame, you say, hey, this gap is too much. I needed to pull back, and then maybe it might pull back, and it might pull back on the time that you're watching, so you can be able to see it, right? You go from the hour, you go to the minute. Let's back out just a little bit. Actually, let's go to the 5-day 2 minute, and 2 minutes is pretty much the same as 1 minute. It's just 2 minutes. Each candlestick, and it just gives an opportunity to see more days than just one. But you see how it always come back to the 200 SMA. It will always do that. It will always come back to the 200 SMA and then bounce. And then you can compare that with the RSI and the MACD. The MACD, it shows that, hey, it's crossing to come back down. And that's exactly what it did. And then when it crossed to come back down, it was close to being oversold. But it didn't go oversold. It crossed again. And then when it crossed again, not only did it not go over the 200 SMA, or go under the 200 SMA, it stayed above it and continued to trade sideways prior to it going up higher. So this would have been something like I would say to, hold and watch, and just I'll let it go. I feel like there's a couple more stocks that are like that in my watch list. I feel like that, auto might be one of those things. If it'll load up on my chart. Auto might be one of those. FOSL might be one of those. Not 100% sure yet because it hasn't really crossed as yet. I think that BDR might do something. of that nature, because it did cross and it had a recent spike. And this is engulfing. This is a strong candlestick here. Now if I go to another time frame, it's not overbought. Even though it's close to the overbought area, the momentum is pretty strong. After a cross back here, crossing this 93-cent area, but we do see that this 107 and 114 area, that gap is there. So we'll curb on the downside of this 89 cents for some support, right? We'll look where the support areas are. If there are strong support areas at that 108 area, right? So you see that 108, there's been some type of resistance there. The one right there, right there, right here, right here, right here. So there's some support here, right? It broke resistance to become support. That's what I wanted to say. So yeah, there could be more upside. I wish I applied this to other stocks that I just kind of dismissed. I shouldn't say I dismissed it, but I knew it was going to have some time to move. Like this one, it ran, and I didn't even get a chance to get in because I was thinking that it lost its steam when I tried to get in from back here. And then when I tried to get it back in again from over here, it kind of faked me out. So this one is another one. It's an OTC stock, NEXCF, dealing with virtual reality glasses, but augmented reality, I should say. But it had the potential. It's overbought on the hour. So right now, the biggest thing that I know, even though it has this engulfing pattern, it could pull back to this 470 area to not be overbought, and then continue to trade higher once it's not overbought anymore. Or it can come all the way back down to this 443, maybe 450 area before going higher. One thing is for sure is that it's going to pull back because it's overbought on the hour candlestick. So, and it's overbought on the minute candlestick. So, hopefully this answers your questions. I gave you about 3 different examples of how a stock chart might look, according to the moving averages, MACD, RSI on the day, the hour, and the minute. Hopefully this was helpful. If you like this video, please like or subscribe. My biggest thing is that I'm just trying to share the little details that I'm using to trade with. There's a lot of prolific traders out there that have more knowledge than I do. I've been doing this for roughly close to 3 years now. So, I'm just starting to see something. So the things that I'm starting to see, I want to make sure I document it and share. So thank you for watching, and I will keep you posted on the next video.